Today I got to chat with David Garofalo from Gold Royalty Corp. We talk about the Fed, we talk about interest rates, inflation, but what we really get into is the sentiment with gold investors right now. We also talk about how David sees young investors starting to shift their mindset from Bitcoin to gold. All right, everybody, enjoy the interview. David, thanks so much for joining us today.
Thanks for having me on.
Okay, so last week, the market seemed to be spooked by the inflation number. And then just this week, we got the Fed coming out with a 75 basis point hike. I think if we go back a year and look at what people were predicting, I don't think anybody saw these types of rate hikes. Obviously, we got the Russia-Ukraine situation, which created a bit of a spike in energy prices. But what's your take on what's happening right now with the way that the Fed's handled things? Should they have been more aggressive early on? Do you think that they're going to be forced to pivot suddenly? Where do you think the Fed's going to go from here?
Well, you mentioned it. We hadn't foreseen these interest rate hikes, but nor had the Federal Reserve foreseen these kind of inflation numbers. And why that's relevant is because real interest rates continue to dive deeper and deeper into negative territory. I'm really not fussed with these nominal increases in interest rates because real interest rates continue to go down because inflation continues to accelerate. And frankly, the headline inflation numbers are completely unbelievable. It's not inflation on the ground at all. I think we're currently experiencing somewhere near 15 to 20% inflation. And that excludes the cost of mortgages. Monthly mortgage payments in the US have gone up about 80%. That's not captured in CPI numbers. And that's eating into people's disposable income in a very significant way. It's insidious. It's eating into their capital, their savings. So real interest rates are dramatically below where they've been historically. And that's hugely constructive for commodities and the gold price ultimately.
Do you think that the Fed and I mean, Biden's been making these comments regularly. He was just on 60 Minutes last week where he seems to be focusing on the monthly number as opposed to the annual number. Do you think that the Fed that it was a mistake to be focusing on annual inflation and not be focusing on more of a short-term measure?
Well, as I said, I think the headline numbers, the CPI numbers, are frankly science fiction. They don't reflect the cost of living at all, nor will they. I think the Federal Reserve will use some pretense in the course of the next 6 to 9 months to pivot on interest rates because the reality is they want inflation. Debt to GDP levels globally are at 350%, more than 3.5 times where they were in the last big inflation cycle. The Federal Reserves and central banks globally, frankly, have zero latitude to raise interest rates to a level that would actually tame inflation, which would be deep into double-digit territory in terms of interest rates. There's no way they're going to do that because it'll cause a domino impact on governments globally. It'll bankrupt them, frankly. Debt service costs in the US, for example, have more than doubled in the last year and a half to about $1 trillion per year, one out of every $7 raised by the US government. Imagine if they actually were serious about taming inflation and raised interest rates to 8, 9, 10%, what that would do to the balance of the US Treasury. It would bankrupt the US government. There's no appetite politically, fiscally to do that. They're going to inflate their way out of debt. Inflation will continue to gallop. Interest rates will pivot downwards. They'll find some pretense to do it. It might be softening employment statistics. They may continue to gain the CPI numbers, the headline numbers, in order to create the illusion that inflation is being tamed, but the reality on the ground is our cost of living is going to continue to go up and up.
Do you think that there is in the back of the minds of the various, let's say, Fed presidents, this idea of credibility, right? Like if we show we're really aggressive for a number of hikes, that everyone's going to take us serious, and if you just go on social media. A year ago, everyone kept saying the Fed's trapped. They can't. They're not going to do anything. They can't do anything. And today, I'm seeing more and more commentary from various talking heads saying, "Okay, the Fed's serious. They're going to keep hiking rates, and they're going to stay there for a long time." Do you think that as we see more and more of that sentiment change, that's when we're more and more likely to see that pivot?
Yeah. So look, I think again, what'll drive the pivot and drive more dovish language out of the Federal Reserve is some of these headline numbers, whether it's employment statistics, whether it's the CPI number, which we all know is really not a reflection of reality, creates the illusion that things are improving from a cost of living standpoint. from a growth standpoint, employment tightness standpoint. Once they create that illusion, then they will pivot because, again, the ultimate objective here is to inflate their way out of debt. There's no fiscally responsible way for them to repay the debt. They can't hope to raise the revenue they need to service that debt. So they have to make it shrink as a percentage of GDP. So they need to inflate GDP upwards.
Okay, so as we sit here, gold sitting below $1,700 an ounce. I think that if 4 years ago I would have sat down and told you that we were going to have these inflation numbers in 2022, you probably would have thought that gold would have been a lot higher. Obviously, we've got the US dollar rocking. But the question that I'm often wondering as somebody who's been a believer in gold in the past is, what's the thesis at this point for gold? What's it going to take for people to start to believe in gold as a safe haven asset again?
Well, look, if you look at past interest rate cycles and points in that cycle when interest rates on a real basis are going down, gold typically goes up between 350 to 400%. And gold has not performed yet to this point, but inevitably it will, because again, it's in the central bank's interest to undermine their fiat currencies, to continue to quantitatively ease to print money, to inflate their way out of debt. And ultimately, gold is the one currency you can't print. So that's the kind of runway I see for gold. That's explosive growth. And when it happens, it doesn't happen in a steady upwards line. It happens in a violent fashion. Sentiment changes on a dime. And then it's really like putting a herd of elephants through a keyhole, because the market is so small for gold, and the capital, when it gets deployed in any sort of reasonably meaningful fashion, gold will go up violently. And I think it's going to be $3,000 an ounce and beyond. Again, that's the all-time high in gold, inflated to $20, when you look back at the last big inflationary cycle in early 1980s. Gold was north of $800 an ounce in those days dollars. Inflation adjusted to today, $3,000 an ounce to me is just the floor.
So would it be safe? I'm not going to ask you to predict a timeline here. I don't know if you've publicly stated one, but would it be safe to assume that you think that we're going to start to see that violent move upwards when the Fed eventually pivots?
Yeah, that to me, I think that's the obvious catalyst, and it's not necessarily saying that rates are going down. It's saying that, you know what, we might be nearing the end of the tightening cycle, and then the sentiment will turn quite dramatically. And I do think that you're going to see that violent upwards movement in the gold price and commodities generally, because commodities are required, particularly on the copper side, battery metal side, required in a growing economy that's decarbonizing.
So you're obviously having conversations with lots of institutional level investors when it comes to gold. What's the conversation right now? Are there people that are starting to lose their faith? Are there people who are like, now's the time to really dig in? What's the general sentiment with the investors you speak with?
So I just came from the Denver Gold Forum, which is our big gold show every year, and just arrived from there yesterday. It's a sense of capitulation. Honestly, That's, to me, it's always darkest before the dawn. That's usually a sign that things are about to turn. And what I mean by capitulation is I'm seeing the usual suspects on the buy side. The specialist funds come to these conferences. The generalists are largely absent, at least sitting on their hands, probably slow to put any serious capital to work in any sector in the equity markets generally right now. But again, when they do come, then they're going to be looking hard and putting serious capital to work. So I would say, yeah, we're at that point where the operators are struggling with increasing operating costs at the mine site. Capital costs are going up on project developments, and we're not seeing any action on the gold price. And so there isn't that momentum to draw the generalist investors back in. And we're seeing an eroding capital base among the specialist investors in the space. The ETFs are cannibalizing their money to the extent there is capital allocated to gold right now. So it is a sense of capitulation. To me, that's generally a sign that things are about to turn.
Yeah, and I spoke with a bunch of companies during PDAC, which is obviously the big mining conference here in Toronto. I'm Toronto based, and the one common theme that I was hearing in many of these conversations was, well, we had no investors come by our table, maybe 2 or 3 over the course of 3 days. And for a lot of junior mining exploration companies, that's who they want to talk to. They want to create awareness. They want to get out there and speak to investors and try to manage their cost of capital so that they can get back to doing what they're designed to do, which is explore. So you've obviously been doing this for years. Have do you recall going to these conferences and ever seeing less people there? Do you think that that's a function of COVID, or do you think that it's just sort of a function of the state of the markets?
It's a function of the state of the markets. I'm afraid to say I've been in this business for 33 years, and
Yeah.
I've seen this before. I've seen this sense of capitulation before through multiple points in the cycle, and I've also seen the violent moves upwards. Coming out of the credit crisis, for example, and you talk about capitulation. That was the grand capitulation in 2008. The world was coming to an end financially, and we came out of that, and gold went up 140%. And We saw significant performance in the equities, not as significant as it should have been for the operators, but in the royalty and streaming space was dramatic performance and dramatic returns for shareholders. And so I'm used to seeing the violent moves upwards, and I'm used to seeing that capitulation in the marketplace and what that portends for the turn in the cycle that inevitably happens.
So, David, before when we chatted, both of us were skeptics of Bitcoin. And I got to say, I go on social media now, and it certainly appears that a lot of the biggest proponents of Bitcoin that had laser eyes on their Twitter profile pictures, they're now gone. They're just regular people without laser eyes. It seems like, although Bitcoin hasn't really cratered, it's been sitting around the $20,000 level for the last number of months, that the sentiment has certainly shifted on Bitcoin. What's your read on Bitcoin right now? And ultimately, how does it impact gold?
Sure. I mean, this is somewhat anecdotal, and I just came from the Denver Gold Forum and heard from some of the younger investors in the space who are now looking at gold. Said they were looking at cryptocurrencies for the very reason that we like gold, is they were concerned about the undermining of fiat currencies and the government control over those. And they wanted to be outside of that sphere of influence, and they wanted to protect their capital. But of course, cryptocurrencies, one, have been far too volatile to provide that kind of safeguard for capital. But also, there is no scarcity value in cryptocurrencies. There's over 8,000 of them, or there was at least at the peak of the market. So anybody and their dog could invent a cryptocurrency. So it's almost become a gateway drug for those young investors who instinctively were looking to protect their capital against the undermining of fiat currencies. And now they're starting to look at gold in a traditional way. And they're being much more focused on gold as a protector of capital, because they recognize now increasingly that there is a scarcity value. It's so difficult to find gold. Gold reserves are going down, production's going down. So it is providing increasing scarcity value in a market where there's an infinite amount of fiat currency and, frankly, an infinite amount of cryptocurrency that can be introduced into the system.
Okay, so you're with Gold Royalty Corp. Right now, you guys are probably, I imagine, looking at a whole bunch of companies that are incredibly distressed, looking for cash. Are there lots of great opportunities right now, or are a lot of the gold companies still trying to hold on to their assets for dear life?
Yeah, look, I do think there's lots of opportunity, and it's not just on the gold side. There are polymetallic deposits out there on the base metal side that have a precious metal component in them, and they're looking to finance their project constructions because copper prices are still in incentive levels, and the world needs a lot of copper. So quite often, precious metal streams come out of those large-scale copper developments, for example, or zinc projects or whatever. So we're run off our feet looking at opportunities, and it's through multiple fronts. And the ones that I just mentioned in terms of project developments, exploration stage, also non-core asset sales, royalties sitting on the balance sheets of companies that really are not royalty companies. For example, we picked up a portfolio of royalties from Nevada Gold Mines, which is Barrick and Newmont's big joint venture in Nevada. They've become our second biggest shareholder now as a result of that transaction. Those things are coming loose. We're originating our own royalties. We're staking exploration claims within Nevada, Quebec, and Ontario, farming those projects out and taking royalties back. That's a very low-cost way to generate royalties. And we've been obviously very active on the M&A side since our IPO back in March of 2021. And we've consolidated 3 of our peer companies to grow our royalty portfolio from 18 to 200 royalties. So we've been adding, on average, about 10 royalties per month since our formation a year and a half ago.
So it's funny you bring up Nevada Gold. That was actually my next question. A $27.5 million price tag for this royalty. What kind of economics are you expecting when you're paying a purchase price like that for a royalty?
Ultimately, double-digit rates of return. And in that case, we picked up a series of royalties. The core royalty within that portfolio was I-80's Granite Creek Mine, which is just ramping up into production. It's 10% net profits interest, which we think will start to cash flow for us within the next couple of years as they ramp up production underground. And that's a deposit that's highly prospective. They're still drilling out aggressively from underground ramps that they've driven into the deposit. As they open this up for production, it opens up drill setups underground. They've been hitting high grade. It's already a high grade mine. It's getting increasingly high grade as they drill it out and explore the depth limits of the deposit.
Do you think that with everything that's happening in the world, we got a ton of volatility when you guys are having these conversations internally about purchasing royalties? Now, I'm assuming you feel a lot better about Nevada as a jurisdiction, but the political risk in some of these places, like some of these countries that I'm sure you could purchase gold royalties in, they've got some pretty serious levels of inflation. I got to imagine that you're sitting there thinking there's a chance that the government could do something, some shenanigans or find a way to block capital from flowing out of the country should we purchase this royalty. Are those active conversations you guys are having when looking at these opportunities?
Yeah, I mean, we always start with looking at the geology and convincing ourselves that the geological model is sound, that it has exploration potential, and can deliver that kind of optionality for our shareholders that they're looking for in the royalty companies. But our portfolio is exclusively in the Americas, and 80% of the underlying value of our business is in Nevada, Quebec, and Ontario, the three best mining jurisdictions in the world, as judged by the Fraser Institute for Mineral Potential, low political risk, and low regulatory risk. And our royalty contracts are sacrosanct legally. It's highly protected, attached to the assets, effectively bankrupt proofed because of the legal framework and the soundness of the legal framework. So we're quite careful about the jurisdictions we go in. We do start with the geology, but we also have to convince yourself, to your point, that we can get our capital out and that our royalties are protected regardless of what happens to the operator.
Okay. Well, David, thanks so much for hopping on here today. This was insightful. I remain a believer in gold. I can't tell you how many gold companies we've written checks into over the last 2 years, and it's been pretty depressing. Sometimes they call me up and ask me to make introductions so that they can raise money, and nobody that are in my network will even take the call. But I've been that good guy who's been helping out a lot of these companies, and I still believe that when gold has its day in the sun, all this work and all these checks I've written are going to pay off. So being able to chat with you about the gold space is something that we really appreciate, having you on here and getting your insights into the gold world.
Well, thank you for your time too today.
Awesome. Thanks, David. All right, everybody. Thanks for watching. And if you could do us a big favor, hit the like button, subscribe, and ring that notification bell. All right. Thank you, everybody.